All right. So we are here with episode 2 of the Done Investor podcast. My name is Koukun.
My name is Ryan.
Today we're going to share a hot deal for you guys. We're going to revisit the hot deal from last month and check out a couple of sales that have happened recently of properties we were just monitoring just to see how things are going.
Yeah, awesome. I'm excited to get into it.
Perfect. So let's dive into first the property from our last episode. So this was 11 Patsy Avenue. It was a duplex with some land beside it, and we were suggesting it to investors as an opportunity to purchase a property that could cash flow and sever the land.
So obviously what we liked about this property was that it was a turnkey duplex from day one. It didn't have a lot of cash flow, but it kept itself afloat from day one. And then obviously the bigger potential was to either develop it yourself, sever and sell, or even potentially demo everything and build big. And you kind of have some rent coming in while you're going through your approval process. Yeah. So what ultimately happened here, we kind of said, if you could get it for $380, the numbers look really good. Somebody bought it for $376. So, or $375, sorry.
$375, yeah.
So we were pretty close on that.
I think in hindsight, this was a pretty good deal. Like if you can sever that land and get, like what were we talking about, like $100,000 a lot and potentially do semis, right? You're recouping half of your purchase price just in land value there.
Yeah.
And at $375 for a property that can potentially cash flow, it's hard to go wrong with that, right?
Yeah, and again, even if it's just sitting on it while, you put together some plans for something larger, almost kind of like land flipping while you're basically not holding the land. There was a lot of potential possibilities there. As I think we mentioned in the last episode, this was a little more for the experienced investor, right? Somebody who did have the plans or was at least looking into kind of getting into more of that kind of land play or that development play. So it was kind of neat. It was a fun one to do. And obviously somebody else, I actually had a couple clients call me about this one, but it was already sold conditional twice.
Okay.
But I think it was the same buyer because it never really fully went back on the market. So likely kind of somebody's doing their due diligence on the land side of
Makes sense. Cool. So there's a couple more properties we want to quickly cover before we dive into our hot deal. Both these properties were available for sale last month, and we were considering putting it as our hot deal, but we chose to go with the land severance.
Yeah, these were a little more kind of your, I guess, straightforward kind of, you could be an experienced investor, you could be a beginning investor, really just turnkey duplexes, which we want to do something a little more fun, but these were definitely out there last time. And as you can see, some of these went for a really good price. The one we're looking at now is 34 Preston. So we're in Northwest Welland. We're in a really good neighborhood. We've got a side split here. The rents, I believe we were bringing in like 3,600. I think it's in the broker notes. But I believe it was like 19 and 17. So you're bringing in 3,600, let's call it.
Yeah.
And this property sold for $500,000.
Yeah, just this area, again, we've already talked about this, where regular side splits in this neighborhood probably sell for more than $500,000.
100%. With a finished basement, 100% they sell for more than $500,000.
It's interesting to see this opportunity opening up for investors who don't want to do work and just buy something turnkey. Someone else has already invested the capital, and our next one is in a similar situation, right? This one is not as crazy of a deal in terms of what it ended up selling for, I would say.
I would agree. I think that this one sold for a little bit more in kind of line what I would be thinking is kind of like market value, I guess.
Yeah.
This is a turnkey duplex. Both of these are legal duplexes. Both of these are actually bringing in very, very similar rent, which kind of does justify their similar sale price. However, this one on
But it's a semi, right?
I was going to say, this one's a semi, doesn't have a garage, doesn't have a paved driveway.
Yeah.
So again, if you look at just kind of some of the factors involved there, I think the one on Preston was obviously a much better deal, but somebody was willing to kind of go in low, and obviously the seller was needed it gone.
It's interesting to see how, when we were really active in the investment space, this didn't exist in terms of no one wanted to sell their turnkey duplexes right after they did the work. So we had to buy it. We had to help people through the renovation process. But I think at this point, enough people have gone through the duplexing process that now on the other side, they're starting to let go of them. And just with the market the way it is, it seems like there's some opportunities. But keep in mind, even this property, it was listed higher, I believe.
Go to the history if you got it here. I don't know if you have it. I might have to.
Yeah, I don't know if.
I believe this started at 6 or 625.
Yeah. And they worked their way down to 549. But again, like we discussed in our last episode, you have to stay active to get the best deals, because this was never listed for 500,000.
Nope.
Right? The person who got it was the one who saw it listed for sale for quite a while and then just thought, hey, let me throw an offer. So yeah, like the best deals don't just, sometimes it's just a low list price but then what happens is you're in competition and it's just like, it's such an active time.
Exactly.
Or the other times you just look and you turn over stones, right? You just look for the opportunity. So
yeah, I think that's kind of the key in this market right now, right? Is there are people who need to sell who are not pricing it like they need to sell.
Yeah.
Right? Because there's that emotional barrier, right? Of knowing what it once was, and then knowing that, okay, we have to sell, but maybe I can still get this, right? So if you're an investor and you're looking to buy one of these properties and you're able to basically have that line in the water and be kind of fishing, and you see a property, it's been on the market for 3-4 months.
Yeah.
It's an investment property, and it's like, no harm in kind of going in and chucking something out there that makes a lot of sense to you, where you'd be like, I'm gonna, like we were saying when we pulled this up, like I would have loved to have got this property for 500, right? If you're someone that's in there and you've got your line in the water and you're kind of turning over these stones, now's the time where you can get these opportunities.
Because like you're buying a property below the price of a unduplexed home on the same street. It costs 50 to 100 grand to put in a legal basement apartment, and you're buying it sometimes 50 to 100 grand less than what the home. So like in a normal world where there is normal investor demand, this home should be priced higher than the regular single family home on the street.
Every time.
So like that delta is getting huge, and the nice part is now there's cash flow, right? You're buying it at a price, interest rates are lower. Like this property cash flow is probably somewhere between say 500 to $1,000, right? So you get a good deal on the purchase, you get cash flow, and the whole goal is just you don't have to do anything. You don't have to renovate.
You can hold it, and theoretically, like again, who knows when this happens, but at some point in our lifetimes, hopefully we live long enough, which I think we will. Like we're going to start to see that delta decrease, right? Like duplexes should inherently have more value than a single family home that is the same size and everything else, right? So at some point in time, who knows when that's going to be, that should come back.
Yes.
So if you're buying it for below what a single family home is, you're just kind of baking in appreciation essentially just by basing on how you're buying it, right? It's a depressed section of the market right now, so if you can take advantage of that, you could be in a good spot.
All right. So let's now get back into our hot deal for this newsletter here. All right. So this is a property in Fort Erie that we're going to look at. We'll look at the pictures after.
Yeah.
It's a duplex that's listed at 500,000. Yeah. Ryan, do you want to take the lead here and kind of go through some of these numbers?
For sure. Yeah. So again, kind of going with the theme of kind of where we just came from, looking at something that's a little bit more turnkey, a little bit more beginner investor friendly. Yeah. Like something like this or those last couple of properties we talked about would be a great first property for an investor, or even, obviously a second and third, depending on what your is, but it's a little bit more simple than doing some sort of land severance play or anything like that. This property is here in Fort Erie. The one thing that I like about it is both units are above grade, which is obviously very nice in terms of finding tenants. Not that we cannot find tenants for basement apartments, but you're going to get more rent if that same apartment is above grade, and it's usually a little bit more desirable as well.
And this one is unique. It has 3 bathrooms in total, right?
You don't normally see units in a duplex that have more than 1 bathroom. It's definitely not something very common, which means you're allowed to get a little more premium for rent for it as well. Yeah. We are going to go through the rental numbers here. One thing to note is they were previously getting higher rental numbers than we are recommending. Rental prices have probably slid maybe a little bit. They maybe just either had like a super kind of premium price there, a rental price have slid, but we've adjusted them a little bit there just to kind of make them a little bit what we think is a little more realistic with today's marketplace. Yeah. So they were getting $2,200 on the main floor there. They were getting $1,900 on the upper floor. We've corrected that to $2,000 and $1,800 just to give you a little bit more margin of safety in there.
And actually, these are slightly incorrect in terms of it being main floor and upper floor. Both units are on the main floor and the upper floor. Right. It's a front to back duplex.
Yes. Each
unit has staircase up, bedrooms upstairs, living space in the main floor, which is quite nice, right? I know there were investors, especially on the east end, that were doing what they call these vertical splits, where they'll do a duplex conversion and separate it front to back or side to side.
Yeah.
That way each unit feels like a semi-detached or it feels like a at least an above ground home.
Yeah, it feels more like a semi-attached kind of property, right? You don't have that feeling that you got somebody living above or below you, which is oftentimes where a lot of
noise.
any sound or anything kind of gets transferred. So,
Which is also again why they can charge potentially some premium in terms of the rent, right?
agreed.
So expenses fairly straightforward. We're calculating a mortgage payment based on today's sort of rental interest rates, property taxes, insurance, gas and water. Hydro is paid by the tenants. There are 2 meters, and property management. And this is kind of crazy, right? Over $1,000 in cash flow on a turnkey property. Yeah, we didn't see these numbers a few years ago.
Not even close. Not even close. I mean, even if you're looking at like what the monthly rent is to the purchase price, like we are inching closer to that elusive 1% that hasn't been around here for literally over 10 years. Like we're kind of getting closer to that number. So getting something that's turnkey from day one, doesn't need renovations, and you got 4 figures of cash flow every month is something we have not seen for a long time, which is it's nice to see from the investor perspective. So
I like that word, 4 figures.
Yeah. Hey man, we're into the thousands, not the hundreds anymore. This is the real deal.
All right. So let's go actually check out this property. Let's take a look. It is
There you go.
So 54 Archange Street. Archange. Interesting. Yeah, so let's quickly go through some of the pictures for this property. So it's kind of a 2-story in the front, 1-story in the back, fairly nicely renovated, new flooring, kitchen looks updated.
I believe the listings of the siding was done the last 10 years as well.
Okay, yeah, it did look nice. This is the second kitchen, looks decent. Bathrooms look decent. Pretty much everything looks updated. Like it's a home that has been maintained, probably renovated for the sale, and it looks to be in good shape. So this property is in Fort Erie, just across near the bridge there.
Yeah, so I mean, in terms of location within Fort Erie, we're in what I would call probably like B class, right? So we're not quite as nice as some of those Welland duplexes that we showed you, where especially Preston's probably getting close to that like A minus, B plus here. This is probably closer to that B minus area. You're honestly though, based on its location, because of your proximity to the border and within Fort Erie, your proximity to where the businesses are, you should have a very easy time renting this, because whether it's somebody that's going to be working at the border or working at one of those businesses, you're fairly central to where people need to be. So that that those people need to live somewhere, and generally they don't want to live too far from work. So
makes sense. Yeah, so I guess pretty straightforward property. It's listed for $499. I think it's a fairly recently listed property. It's not too old, right? Do we know?
I think it's listed in the last couple of weeks.
Yeah, days.
Oh,
days
not even
market.
6 days. Yeah,
perfect. Okay. So yeah, again, it's one of those things to watch, right? I think again, like we're estimating 480 as the purchase price, but again, you don't really know where it's going to land until you put in an offer and kind of see what the other side needs in terms of the price they're willing to go to, right?
For sure. And I think that's also something that is kind of good to mention right now, right? Like obviously when we're looking at this one, this kind of jumps out off the page as we're looking at properties that were there, right? It's priced well currently. It's got good rents that could come in currently. Everything makes sense from day one. We'll obviously find out where this goes. We'll monitor this and bring it back up next month and see what ultimately trades for. But when you have something that's like, for instance, doesn't look as great from day one, doesn't mean that property doesn't ultimately trade for something that looks great, right? And so I think that's where a lot of, I think this property will probably trade in the upper 400s, whether it takes a month or two. Obviously, that's to be determined, but they've priced it well from day one, right? Whereas, like, again, if we look at something like that property like Preston, if they had priced it at 519 or like right around 500 from day one, that thing probably honestly would have sold for more than it did.
Yeah.
And it would have moved a lot faster. Yeah. Right? This one comes up, it looks good. Like there's no reason we shouldn't explore it. But when we go back and we go look at properties that have been sitting on the market for, I was looking when we were pulling these up, there's been properties on the market since 2024. You know what I mean? So we're in March 2024 was like the one that I saw. So properties have been on for 2 years now.
Yeah.
Right? So if you start looking at something like that and maybe you really like the property, you like what the property could be, but maybe it's priced 50, 70,000 above of where you're thinking the numbers really make sense in your head. It doesn't mean it's not worth a shot. It doesn't mean you're going to get it. You have no idea where the seller is, but that's where a lot of the times you can get these really good deals because it's actually selling for less than it would have been if the seller's priced it lower from the beginning price point, right? So there is opportunities out there that may not look so great when we just like display it on paper. But if it's a property that you like, it fits your criteria, it fits in the location that you're looking, that can be a time when you want to just kind of throw something out there and kind of see what happens. It's not like, well, we know you're going to get it, but this is the time to be doing that, right? So
I'm curious your perspective on this. Like, why isn't there more investor demand right now? Like, I understand the big picture stuff, like geopolitics, tariffs, but like in terms of fundamentals, like it's been a while since things were this good, where interest rates are low so that cash flow is there and prices are low at the same time. Rental demand has softened slightly, but you're still getting decent rents, right? If you have a decent unit. Like
what I'm seeing, and I think it's more the area of investor demand.
Okay.
So what I'm seeing is people who are like, have a slightly bigger bankroll, maybe have been doing this a little bit longer, that are kind of investing in what I would say like maybe a little bit more larger properties. Like if you look at purpose-built properties, they're seem to be, they're moving a lot faster than these types of properties.
Interesting.
Which should not happen, right?
Yeah.
Generally speaking, there should be a much smaller pool for those types of people. There's a lot more due diligence that goes into them. There's a lot more money that's required, even just in the due diligence phase. Those should trade a lot less frequently.
Yeah.
Right now, I think that the people who are buying those are the people who are more of the seasoned, experienced investor, and they seem to be the ones that are transacting on that.
Interesting.
Right? I feel like the people who oftentimes bought these like turnkey type of duplexes were generally speaking that kind of newer investor, somebody kind of maybe looking to buy their first investment property, kind of looking to get into it. And I feel like that section of the investment market has really, really slowed down. There could be, I'm just spitballing here. None of this is necessarily from facts, but I think there's a lot of fear around people who maybe you were thinking about buying your first investment property in 2022. You were kind of waiting. You've seen what's happened.
Yeah.
So there's a lot of fear surrounding that.
And it's quite reasonable, right? Like I think we've seen prices come down the last couple of years. So there was the big drop off, but then even there's been this incremental drop off. So
prices went down almost 10% in 2025.
Oh wow.
You look at the beginning of 2025 to now, like I did a time adjustment. We have like the HPI tool, right, where you can time adjust something. So I did something from March 2025 at 700,000. And then I put that in for today, March 2026.
Yeah.
And I adjusted it basically. What does the time thing say? 700, according to our calculator, 608 today.
Wow.
So that's actually more than 10%. Obviously, that's one neighborhood and everything like that. Wow. But if you look at a whole, there's been on average almost 10% reduction just this year after we've already seen 20+% in the previous two, right? So there is still there. And obviously, I think that where's the bottom fear is definitely still there. Yeah. And again, as you and I both know, if you're trying to time that bottom, I think that's, who knows where that is. If you're investing in this for the next 10 years, I think it's pretty safe to say that you may not be at the bottom, but you're below where it's going to be then, right? So,
yeah, no, I think that is interesting. Like, it's interesting how when the market was very active, so many investors came to us saying that they're a long-term investor, they're going to hold on to it. And then as prices came down, we have so many conversations now of like, I don't think it's worth it. I want to get out. So it's interesting how sentiment affects our time frames and our willingness to hold on to something for the long term. Right?
I 100% agree. It's one of the most interesting things for me as somebody who talks with people in this space a lot is seeing how if you zoom out, and it's obviously easiest for us to do this in hindsight, right? We talk to a lot of people, we kind of see the emotions in the past and obviously acting in the present's a little bit different, but it's very interesting to see how when things were ripping up, numbers didn't make sense. Sentiment was so high.
Yes.
People were gung-ho to do it. So, I mean, you see them in the stock market and stuff. When Bitcoin was 120, people were like, "Oh, you're gonna buy." Now that it's 70,000, everybody's like, "Oh my gosh, I should sell what I have."
Yeah.
Right? That's obviously a different fundamental dynamics than something like this, but the psychology behind it's the same. When prices are high and the investment doesn't make sense in real estate, people wanted to buy real estate. Now that the numbers make sense, but sentiment is really bad, not a lot of people are looking to buy real estate. So
Yeah, I think I don't know. I go back to what we discussed on the last episode because, and this is on some level how investing works, where the best deals are available when no one wants to take them. Mm-hmm. And to be a good investor, it's not just about the timing. You just have to have the mental willingness to do something that everyone else isn't doing. Right? It's easy to buy real estate when everyone is saying it's a good investment and everyone is saying you should buy real estate. Prices are going up. The media is on your side. Everyone is like in that same wavelength.
Everyone's in that same wavelength. Though.
Yeah.
That's the problem, right?
Yeah. And it's hard when it's the reverse and you like it goes against our deepest human psychology, which is you stay with the pack for safety. And each time you stray off on your own, your mind thinks you're in danger, right? So, and that applies even in investing, right? It's like, oh, but I know many people who've lost money in real estate, or I've lost some money in real estate, and I hear the news that prices are coming down, they're going to go down more, and like to then still make the decision of like, but I think all that aside, purchasing now at this price with this cash flow, provided I can hold on to it, is a decent investment decision. Now, does it fit with the overall picture? Everything else you own, you have to assess that. But
I think that's what gives people staying power, though, is when you look at the keep this in the investment lane here. When you look at the investment and the type of the investment, and it matches with like your values or your lifestyle or your investing philosophy.
Yeah.
Right. It's going to be easy for you to stay with this.
Yeah.
Right. If you're jumping into whatever it is, real estate, I don't care what, some stock or whatever it is, because everybody's telling you that it's a good decision and you haven't vetted it yourself. It doesn't fit in with like your ethos. You're going to be the same person that, when it starts to go down, you're going to jump or you're going to get away from it. Right. And that's almost like the guaranteed recipe how to lose money investing. Right, is waiting for somebody to tell you it's good and then jumping out when they tell you that it's going to be bad. If you look at something from more of a fundamental perspective, what fits in with what I'm trying to do? Yeah. Right? You look at, we're in our early 30s. It's like hopefully, God willing, our time horizon is going to be a long time. Right? So what fits in with our time horizon? Do we care if it goes up in the next 2 years or do we care if it goes down the next 2 years? We shouldn't. Because we shouldn't be using that as an investment, right? Yeah. We should be like, okay, what are the long-term fundamentals? Am I going to be able to hold this? Do I have staying power? Because that's ultimately what's going to do it, right? Like you look at just the simple thing of compounding, right? I mean, it's not as simple as, okay, the market's giving you 5% every year and it compounds, but the same things happen in real estate, where the longer you can stay in it, the more of a chance you have at the compound, the more of a chance you have for your mortgage to get paid down. And that's really where you start to see the gains. So obviously, like you have to consider it as something's for you. Yeah. But if it is for you, don't be waiting for everybody else to tell you now's the time, right?
Well, I think that's the hardest part. Like, so obviously we are in the real estate mortgage industry, so
we're in the space.
We have a benefit to telling people now is a good time to buy, right? That is the nature of it. At the same time, if your entire circle is your friends and family and people who have an opinion about real estate is just bought into sort of it's now is a bad time to buy. If you're looking for reassurance from them, now is the right time to buy. It's not going to come, right? And I think I would even say take it as far. Don't listen to us. Don't listen to them. Make a decision for yourself, right? Like you said, look at the cash flow. Look at the fundamentals. Look at how does it fit within your lifestyle. Maybe ask AI, right? Get a third party, less biased viewpoint on it based on the overall picture. Like making that decision despite everyone else's opinion. Like I feel like in my life, many of the best decisions had to be made when it wasn't clear yes or no. There was uncertainty around it, and I had to make a decision that wasn't necessarily the consensus. And I was right in some shape or form, right? Like one of the best real estate investments I made was in this condo student rental building, which had a condo fee of, I think when I bought some like $700, and this was back in 2015. So high, that building had fraud happen to it. A fraudulent condo manager took out like a $10 million loan against the building, fled the country, right? They found out about the loan 2 years after because he stopped making the payments. And they're like, oh, we didn't know this was secured against our building. All the unit holders had to pay a special assessment. So like crazy story, right? And because of that, the building was in disrepair. They didn't repair it. So like here I am, I think I was, what was I, like 21, 22. I was like, yeah, this unit has 5 bedrooms. It's near UTM. I can rent it, get some good cash flow. The building doesn't look great, but it's like, it's an investment. And the condo fee is high, but my rent covers it. Like that was literally my analysis. And when I talked about it with other investors, now to their credit, a couple of people followed me to that building where I just talked to them and they ended up buying units and they did well as well. But most of the people were like, yeah, I'll never touch a condo. I'll never touch like, a building that had issues with it. A condo fee is too high. All these sort of objections, which are valid objections. And maybe they did well doing other things. But to me, it was like, I had to make that analysis and no one was there to tell me you're doing the right, this is going to work out for you. Because they couldn't have. It's a risk. You're making the best decision based on the information available to you at that time, right? But yeah, in hindsight, that building repaired itself. The condo fee went down. I don't know if you've ever heard of a building where the condo fee's gone down.
Never. Literally never.
So they did both. They reduced the condo fee. They improved the building. They started redoing the balconies and the lobby and all of that. Our rents went up and just the building appreciated like nuts because it was in Mississauga. So it was like a diamond in the rough, right? So like it was like, or what's the reverse of a diamond in the rough? It's like
a turd in a haystack.
I was gonna say that. But yeah, basically like it was in a prime area of Mississauga.
Yeah.
And it was like this ugly building.
Yeah.
And I remember I was living in one of the units at one point, and I was even talking to my now wife about that building probably after we got married. And I was asking her, like, if I was still living there, would you have like moved in with me? She's like, yeah, I don't think I would have moved there. Like we lived in like a rough part of St. Catharines. So
I know where you lived. Yes, you did.
And she was like, I don't know if I'd want to live in that building, like it had like all. So again, this is how you frame an opportunity. Like one of the student rentals we had mice, roaches, eventually bed bugs, right? Like we had all the problems, but it's like you deal with problems sometimes, and sometimes it can be lucrative if you can see the opportunity when others sort of walk away because it's just too much for them, right? Yeah.
I mean, like, let's put it, if everything was easy and straightforward, everybody would do it, and then you would inherently lose your advantage.
Yes.
Right?
Or it'd be priced such that the advantage doesn't exist.
Yeah, exactly. Right? Like, it's just, okay, when everything's good, well, then that's just naturally how it works, right? When things flow when everybody thinks Amazon's great, Amazon price just becomes higher.
Yes.
Right? And that's when everybody thinks it's a good time to jump in.
Yeah.
Right? And so, I think it's one of those interesting things where if you've been kind of thinking about real estate investing, if it's something that's been on your mind or you're interested in it, not that like, okay, go run out and buy something tomorrow, but maybe like put on some earmuffs and do your own research.
Yes.
You know what I mean? Kind of cut out the noise because there's so much noise out there right now, right? Which if you listen to half of it, you're going to be spinning like this. If you listen to all of it, you might as well just evaporate. Like you got no chance of understanding what's real. But if you really kind of, what's my situation? What are my goals? What would I be happy with? And most importantly, what am I willing to withstand? Right? People who bought, let's go back to the previous peak. Okay. People who bought in the peak of 2017.
Yes.
Right? If they started to panic when things started to drop down a little bit because of the foreign buyers
tax
came in then, and you were like, oh my gosh, I got to get out. You'd be kicking yourself. Right? Now we've had ups and downs since then, but if you bought in 2017 and you're sitting here right now, even after all this that's happened in the last 5 years, you're doing pretty good still, right? And so that's one of those things where if you are like, this is my plan, I'm willing to go through the ups and downs of this because I believe that this is going to work for me for whatever reason, then you're going to just forget about it, right? Like I think there's a line, but it's like if you buy a stock and you just happen to lose that ticker for 30 years, probably going to do okay. If you did your research from the beginning, right?
Sure.
It's when you're checking it all the time and looking at the ups and downs, that's when it can become a little emotional and you start to hear all that noise that comes into it, right? So
Yeah, it's hard. Like I think there's no way around it. Like it is hard to make investment decisions when it is on some level a good time to consider it, because there's a reason why it's a good time to consider it, right? And it's hard, it's emotional, but I think one of the biggest things that I've learned dealing with investors and being an investor is that your emotions play such a big role in the process. And like anyone who says like, yeah, it's just a business decision, it is, but
business decisions are emotional. I will tell you, I find it like what you just said is, I could talk about this for like hours. It's someone, you've dealt with hundreds of investors, so have I, and everyone wants to tell you, I don't get emotional about this. This is just about the numbers.
Yeah.
This is the business decision.
Yeah.
Those people are more emotional than the home buyer that's buying the home.
Yeah.
Almost every time. Because guess what? Money creates emotion about you.
absolutely.
100%. And if you think that it's not like that,
Yeah.
you are so blind to one side of you that's making decisions that it's just gonna be more difficult for you.
Well, it's hard, right? Because if you don't give it this, like if you don't give yourself the space to experience the emotions that you have around this decision, it's just gonna come up, but at an unopportune time, right? When you're in a conditional period or when something goes wrong, then it's just gonna like,
I knew I shouldn't have done this. I can't believe I did this. I'm so stupid, right? Like,
yeah, like it's the amount of buyer's remorse we've dealt with, the amount of like, just, yeah. And it's one of those things like just, you're going to be emotional about your money. You don't want to lose your money.
Yes.
You want to make a good decision and hopefully it grows.
100%. And like, yeah, you can put it into an equation,
Yeah,
but guess what? You made that equation.
sure.
So if you're emotional while you're making that equation, it's going to change.
Yeah.
Right? If I'm sitting at a property that I really like because I think it's going to make me money, I may, shift those metrics just a little bit.
Yeah.
Enough where it does it. Similarly, if I'm like really afraid and a property actually makes sense, but I'm just too scared to do it, I'm shifting those metrics way on the other side of things, right? And then all of a sudden, without me knowing it, I become emotional about this decision for better or for worse.
Yeah.
And I don't realize it, right? When you can kind of be a little bit self-aware and be like, there are going to be emotions surrounding this decision.
Yeah.
That's okay. I want to try and remove those emotions and be practical about it. That's fine. But if you don't acknowledge those emotions in the beginning part, I don't care if you tell me that you're not going to be emotional. I'm hearing how you're talking. I'm watching the decisions you're making. You're being emotional. You're just not noticing it.
Yeah.
And that's when it's the worst, right? Like when I don't know something and I think that it's not affecting me, and meanwhile
It's your blind spot, right?
it's the worst.
Yeah.
Right? Like that's when you can make tough decisions. So
Yeah, this is where it's interesting, right? I think to be a good business owner, to be a good investor, it's not that you're unemotional. It's that you're self-aware of your emotions, and to have the ability to see when others' emotions are misplaced, right? Because like market sentiment is the emotions of all the participants in that market.
yes.
Right? What is the consensus? What does everyone feel collectively? Do we feel real estate is going down and therefore the sentiment is low? Do we feel it's going to go up and then therefore people are euphoric? People are bidding up profits, right? And then on some level, you have to decide and you have to assess, like, how does my emotions differ from the overall market? And is it valid? Is the overall market valid, or is my emotions and my analysis and my view of real estate valid, right? And to give yourself some grace that, like, if you make a mistake and you make some bad decisions, like, as long as you were careful about the way you did it, hopefully it doesn't take you out of the game, right? Hopefully if it's a setback, it's a setback, but just make decisions with, like, I want to be different from the crowd, because that's the only time you can make any outsized returns. Yep. And at the same time, maybe I don't want to put all my eggs in one basket. I want to be somewhat conscious, have a buffer, have a reserve, right? Don't max everything out. Don't borrow on credit cards to do renovations. Like, just scale it back, right? Give yourself staying power. And again, it's not just staying power financially, it's also staying power emotionally. Like I have done a renovation where like one of the duplex conversions I did early on, I did with a couple of partners where we had the money for the down payment. We didn't have the money for the renovations. I used every line of credit that I had. It maxed it out. Thankfully, it worked out. The renovation was completed. We refinanced, paid everything off. But it's like, that puts you in a much harder place to be objective, to be like level-headed, right? And like I did it with like, 5 to 8% interest rates. I know people are doing it like on straight credit cards, private loans, like they're just levering up to do it with the hope that the refinance pays everything off. That is where you get in trouble, because like it's natural for you to freak out if things aren't going according to plan, if the project's delayed or if costs go higher than expected, because you've put yourself in a corner, right?
Yeah, that's when you're going to get emotional, right? You probably got, just looking at that scenario, I don't know what property you're talking about, but like when you see a property and you think that you can make money on it, you're like, okay, well, if everything goes as I'm thinking, I'm going to make money. So it makes sense for me to borrow this to complete this.
Yeah.
Right? So that was an emotional decision that got you there because you thought that you were going to make money. Some people may say that was a money decision, but it was emotion because you're like, okay, I'm going to lever up to get this done.
Yeah.
Then you get in there. Fortunately, it worked out for you.
Yeah.
But you didn't get lucky with the timing. Let's say interest rates decided to spike while you were doing
Yeah.
that. All of a sudden, your numbers don't look good. Now you're making another emotional decision, and then that's when things can start to spiral, right? That's where, like, unfortunately, we've seen people make emotional decisions, and then they're forced to make another one, and that's when you can really, the compounding of the other way.
Yeah.
Right?
Yeah.
So.
Yeah, it's interesting. I think ignoring your emotions is like, I think it's just not a good way to live your life. I think that's one part of it. And the other is like, I believe you make better decisions that are aligned with your values, right? Aligned with the way you want to run your life, your business, your investments, like, and to be cognizant when your emotions don't serve the task at hand. Like it may be warning you of a potential risk. Listen to that, and then still make your decision, right? You don't want to be blindly like pushed around by your emotions either, right? There's that balance of like. So, anyways, I feel like this is an interesting topic for an investment podcast. Yeah, I feel like we've covered quite a bit. Anything else? Anything else interesting in the market in terms of investment properties, rentals, things you've dealt with investors? Anything else notable?
Not too much. Like I would say, like from the rental side of things, seems to be pretty steady.
Okay.
Leased out a good few properties in the last couple months.
How are rents? Are they staying level? Are they going down? What are you seeing?
They're down from the peak for sure.
Okay.
100%. So it really depends on when the investor last rented it out. Right. For instance, like we were dealing with somebody who rented out a basement apartment in 2020, at the end of 2022.
Yeah.
And their tenants finally leaving.
Yeah.
They were getting $1,800 for a 1-bedroom plus den.
Yeah.
And that was a hard conversation because I was like, you will not get $1,800 today. Wow. Like there's just, I don't know how you got, like you had the perfect storm to get that initially. So now it's like, are we going to get you $1,800 now? No. Can we maybe get you $1,650, $1,700? Yeah. Okay. Right.
Like I finally only very recently stopped doing rent increases, I think across the board, unless my properties are more than $100 below what I believe today's market rent is. And
I couldn't, that should be a PSA. Like absolutely. If you are a landlord right now and you have a good tenant in place, don't, and like obviously if you're somewhere within market rent in the last 10 years, like literally 10 years, do not raise that rent because.
Well, I think like it depends how far below market.
Yeah, like so I mean, if you got that tenant within the last 10 years, you're not going to be that far below market.
We started with 15, 16 for uppers and like 1,200 for basements.
Okay.
Right, and then I think it lasted for a very short time.
Because like when I leased mine out in 2019, we got 2,000 for the upper, and you got
a premium.
Yeah,
I think you had a nice.
It was a nice unit. It was
nice unit. Yeah, many times we were renting out the uppers without doing work to it. So I think 15, 16 was like an unrenovated.
That makes sense.
Upper
that makes much more sense.
Yeah.
That makes much more sense.
Yeah.
Which again, like you're not getting 2,000 if it's unrenovated today,
Interesting. Yeah. Interesting.
right? So like if you're I don't know, if you're like within $200 of market,
Yeah.
I would say
My rule is 100 for myself.
Yeah.
Like I think anything. So like if the tenant cannot find a comparable unit to mine, that's like I don't even want to be the same rent.
no.
I want to be less because to me, him leaving is a month's worth of filling costs plus vacancies. Like to me, I want to stay cheaper, right?
I price every one of my own rentals $100 below what I consider market, and market is not the top rent that you can get. Like, you know what I mean? Like, say I could,
yeah.
So like,
like a realistic,
yeah, like say like I got a 3-bedroom, 1-bathroom renovated home right
Yeah.
now. Maybe you could squeak 2,100.
yeah,
I think market's probably like 2,000 to 2050. I want to be like 1950.
yeah,
Like I want to have the best of the best that's coming through that way. Not everybody wants to do it that way, but I think you're long term, you're probably in a better spot. Because you think about it, you lose 1 month's rent.
yeah.
How long does it take you to get that back?
It's a long time. It's
more than a year.
It's a long time.
Like, yeah. So.
Like I was sending a screenshot to my brother the other day of the bank account of one of my rentals. It was like $37 in it. I was like, shit, I need to put some money in here. And yeah, it's like I had a vacancy last November, I think. So then I had like the filling cost, the 1 month of vacancy I think I had between the tenants. And then, yeah, just that property, I refinanced it. So it's bleeding a little bit of money every month. So it's like, I just need to watch it every now and then. Okay, I need to put a bit of money into it. But yeah, again, this is some of the challenges that we face for those of us who bought, and especially if we refinanced it previously. Yeah, where it is, you just have to withstand it, right? You have to get through it. And you have to make hard decisions like this. Like even for me, like that property, it's bleeding money every month. I'd probably be happier if the rent was higher, so I bleed less. But at the same time, I need to be cognizant of like, how much am I going to bleed per year, not every single month? Because like I can have a higher monthly rent and then the tenants leave, and then over the year I'm bleeding more.
Yeah.
Versus I have a low rent, they stay, I have no filling costs, no vacancies, and like my overall costs stay lower. I still see the painful loss every month, but it's overall better. And I need to like, and this is where again emotions. It's hard. You need to make good decisions, and it's harder to make good decisions when financially things are tight.
Yeah.
Right.
No, I agree. Yeah, it's certainly interesting.
Awesome. I think we covered quite a bit there, and yeah, this episode will go out on the Hot Deal newsletter that we're running. If you're not on the Hot Deal newsletter, we will be creating. I didn't talk to you about this, but I think we should do it.
Okay.
We'll make a website for those of you finding this episode on YouTube to sign up for it, so that you can get access to the listing, but also the profit calculator and all the details that go in the actual email. So we'll set that up for you guys. And if you have any questions, feel free to reach out to both of us. We'll leave our contact details below as always. And until next time.
Awesome.